Good morning, friends. Welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that uh, though the markets were into overbought territory, some sort of cool off could be seen, and from the lower levels, we might see rally coming in. On Monday, Nifty rallied sharply. Then, for rest of the days of the week, it remained slightly bearish. And on Friday, we have seen that some sort of buying was seen from the lower levels. Although our strategy was buy on dips, but for throughout the week, Nifty remained into a consolidation phase, and on the fag end of the week, Nifty tried to rally in the fag end of Friday. So looking at the charts, the setup seems to be quite positive. And now let us see on the daily charts what are the patterns of are found on the Nifty daily charts, and we will try to figure out what could be the trend for the next week. Now let us see the Nifty daily charts. This is the Nifty daily chart. Now here we will see what was the daily pattern formed on the candlestick patterns. Now this is the indicator RSI, and we have been talking about the upward rising channel, which have been maintained since last couple of weeks. You can clearly see that this rising channel we have been mentioning for last couple of weeks, and it has been into that particular channel. Just on Thursday and Friday, what we have seen that Nifty just went below that particular channel, and again on Friday it has tried to just enter into this particular upward rising channel. So looking at this particular thing, we feel that again Nifty is poised to rally from these levels, and Nifty has potential to test the levels of almost 18,300 mark, which we have been advocating since last 4 to 5 weeks when Nifty was quoting around 15,800 mark. So still we have a strong stand on that particular target of 18,300 in next couple of weeks. So looking at this chart pattern, RSI still into positive territory with positive signals. We feel any dip should be used as a buying opportunity in Nifty, at least for an upside target of 18,000, then 18,100 odd mark for the next week. So the strategy should be buy on dips. Now let us come to the important supports and resistance for the Nifty on the daily charts. The important support in the Nifty for the next week is placed around 17,600 is the first support. Below that, the second support is placed at 17,200. Below that, the third support is placed at 17,325. Whereas on the upside, the first resistance is placed at 17,901. Second resistance is placed at 18,118, and third resistance is around 18,228. So these are the important supports and resistance in the Nifty. Traders are suggested to follow these levels and try to trade in the direction of the trend. Looking at the chart, the trend would remain positive for the next week also. Again, in Bank Nifty also we have been advocating about this rising channel, and we are still saying that the channel has been intact. So most probably until and unless this channel is not breached decisively, the trend would remain positive. So as I said, we were expecting a cool off and then a rally, but on Monday we have seen that it was a very big candle. Then for the Tuesday, Wednesday, and Thursday, Bank Nifty consolidated, and on Friday it showed some sort of strength from the lower levels. Looking at this RSI, it is into a comfort zone. It is with positive signals. Bank Nifty moving in this particular rising channel. The trend is still intact. I mean to say the trend is still positive. So any slight correction, maybe 150 points correction, should be used as a buying opportunity in Bank Nifty. Bank Nifty has potential to test the levels of 39,000 in the coming weeks. So definitely the trend is intact. I mean to say trend is positive, and dips should be used as a buying opportunity. Now let us discuss the important supports and resistance in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 37,346. Then second support is placed at 36,827, and third support is placed at 36,242. These are the important support for the next week. Now the first resistance in Bank Nifty is placed at 37,975. Then second resistance is placed at 38,231, and third resistance is placed at 38,768. So these are the important supports and resistance levels in Bank Nifty. Traders should try to follow this supports and resistance, and try to trade in the direction of the primary trend. The primary trend is positive, and dips should be used as a buying opportunity. Now let us come to the third segment of our show, which is option analysis. On the Nifty call side, the action was seen in, you will see on the screen. Yes, it is a clear. You can see that the action was seen in 17,900 calls, then 18,000 calls, the 18,100 call, and 18,200 calls. Now here you will clearly see that there has been a rise in the open interest. There has been a rise in the option premiums. Implied volatility is between 15.89 to 16.68. Now here just only one thing which I would like to mention here in 17,900 calls, there has been a shedding of the open interest. I mean to say there might be some sort of profit booking, or might be seen because initially this particular market were under pressure, and then on the fag end, I mean of the week, on the Friday, we have seen some sort of rally in the last 1.5 to 2 hours. So maybe some call writers might have started liquidating position or cutting the short positions. That is the reason why we might have seen shedding of the open interest. But I'm definitely sure that this shedding would turn into positive open interest, which will indicate that now the smart money has started buying 17,900 out of the money calls. So looking at this overall pattern, rising open interest in 18,000, 18,100, 18,200 calls, then rising option premiums, implied volatility it is into comfort zone. We feel at least that 18,100 to 18,200 could act as a major resistance for the next week. So the target for the next week would be around 18,100 to 18,200. Now let us see what we have observed in Nifty puts. In Nifty puts, you can see there has been a rise in the open interest of 17,700 puts, then 17,600 puts, then 17,500 puts, then 17,400 puts. Here you can see percentage drop in option premium. You can see implied volatility. It is between 13 and 16. Here you can see the rise in the open interest. Volumes are also on the highest side. I mean to say the volumes are also on the rise. Now this particular thing is very important for me. Implied volatility is into comfort zone between 13 and 16. But the drop in this option premium is clearly indicating that smart money has started writing Nifty puts. Now writing Nifty puts, which clearly indicates that the smart money might be thinking that Nifty might not drift below or will not break 17,400 mark on the downside. So 17,500 and 17,400 could act as a strong support for Nifty for the next week. So the overall data shows that the strategy should be used as a buy on dips, and this Nifty calls and puts and the rise in the open interest is clearly indicating that the trend is positive. Now let us discuss what we have observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 38,000 calls, then 38,500 calls, then 38,700 calls, then 39,000 out of money calls. Now here you can see there has been slightly rise in the option premium. Here you can see there has been slightly drop in the option premium. Implied volatility is little on the higher side between 23.83 till 25.36. There has been the rise in the open interest. So looking at this particular data, we feel that it will take some particular levels to be breached. So once 38,000 is breached on the upside in Bank Nifty, we might see this particular change in. I mean, the smart money might start buying these option premiums. So which will take Bank Nifty on the upside. It will pull Bank Nifty from here, from these levels. So definitely 38,000 could be a trend deciding level for Bank Nifty for the next week. So either traders can buy above 38,000. If Bank Nifty crosses 38,000, one should go long, or wait for some dip, maybe 100 points or 150 points, and then try to create long position at the lower levels. Data is not that much negative, but maybe the smart money must be waiting for this particular breakout of 38,000. So again, there is nothing sort of weakness in this particular data. So again, the strategy would remain same, buy on dips from these levels. Now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 37,500 puts, then 37,000 puts, then 36,500 puts, and 36,000 puts. Now here also we can see you can clearly see this, the rise in the open interest. Implied volatility is also slightly rising. It is between 19.69 to 24.82. Now here the most important thing is the significant drop in the option premiums. Now this is clearly indicating that smart money has started writing puts. That means that they are very bullish on the Bank Nifty. So looking at this particular data, as I said, we might see a slight downside in Bank Nifty again, but that downside would be kept. There could be support seen at the lower levels, and then Bank Nifty might start rallying and start its upward trajectory from the lower levels. So this writing in the Bank Nifty puts is clearly indicating that smart money is bullish from these levels. Any dips should be used as a buying opportunity. So now overall, looking at the charts of Nifty and Bank Nifty, the overall data analysis of Nifty calls and puts, Bank Nifty calls and puts, it is clearly indicating that any dips should be used as a buying opportunity, and in next week the market might remain in positive territory or positive direction. So if anybody has shorted the market, should try to book their profits if there is some cool off, and try to build in long positions in Nifty and Bank Nifty for the next week. Now friends, let us come to the final segment of our show, which is the positional call. I have identified one stock. The name of the stock is Tata Metaliks. Now let me draw a trend line which will give us a clear view what the stock is trying to give us indication, looking at the chart patterns. Now this is what I have identified. Now here traders or investors can clearly see this is a downward falling wedge. The stock has been beaten down significantly from the levels of 1360 till 700. So almost stock has corrected 50% from its all-time high. Now this is the daily charts of last couple of years, from 2018, 2017, 2016. This is the trend. You can clearly see the downward falling wedge. Now let me just zoom the chart so you will have a clear view. Now you can see from here onwards the smart money might have been buying or accumulating the stock. You can clearly see there has been slightly rise in the volumes compared to this particular ticks in the volume. The price was showing strength. There was correction, but that correction didn't broke this particular previous lifetime low. I mean to say 52-week low. RSI is showing this. Let me show you the positive divergence in RSI also. It is not a positive divergence, but it is showing a positive trend. So a breakout supported with these strong volumes is clearly indicate that the stock has seen a trend reversal. It is poised for a big upside rally from the current level. In Tata Metaliks is around 875. So long-term investors can accumulate the stock between 875 to 850 for an upside target of let me draw the horizontal line, the upside target of 1038. So this is the target for Tata Metaliks for long term. Definitely any dip should be used as a buying opportunity. It should, this stock should be into your investment portfolio for long term perspective. So friends, let us conclude the show. You guys, for suggestion you can give any into the comment box, uh, and just the strategy should be buy on dips for the next week and have a nice trading week. Thank you.